Dabur, the FMCG leader and a disruptor of categories as varied as hair oil, oral care and honey, is now at the verge of meeting new set of disruptions itself. Now, one of the major second-order adverse impact from COVID-19 is the unfolding reverse rural migration. Now, if you see, this may lead to a pause in India's own inter- and intrastate remittance economy and have an implication for consumption patterns also going forward. In our Ideas for Profit today, I will discuss if Dabur's elevated rural exposure is its Achilles heel. Let us first look at the Q4 earnings of Dabur. Now, Q4 consolidated revenue declined by 12.3% year-on-year, largely on account of domestic FMCG volume degrowth of 14.6%. International business was relatively stable with a marginal decline of 0.6% as well. Now, revenue loss due to lockdown was 360 crore rupees and company had posted domestic volume growth of 4.6% in the first 2 months of the quarter as well. Now, speaking about the segmental performance, home and personal care space, as well as if you talk about which actually contributes to 50% of the domestic revenues, as well as foods that contribute 16% of the domestic revenues, were relatively more impacted. Now, on account of impact worth about 115 crores due to COVID-19 related disruptions on the operations, net profit declined by 18.9%. Now, in order to take the benefit of higher spending on, say, health and hygiene theme, the company has introduced a range of immunity booster products, and this also includes tulsi, haldi drops, amla based products and the immunity kits as well. Now, in the personal care segment, Dabur has also launched a range of sanitizers, surface cleaners, disinfectant sprays and also veggie wash. Now, Dabur has taken 100 crore rupees exceptional loss due to the provision for the impairment in the value of treasury investment as well. Now, coming to the outlook, with about 45% of sales from rural areas, rural consumption growth has been an important lever for the company as well. Now, during Q3 commentary, there was definitely an inkling of the rural revival due to strong crop sowing in the Rabi season. However, the reverse rural migration has potential for upsetting the apple cart for the companies having higher rural exposure. Now, this essentially breaks the interstate and intrastate urban-rural remittance cycle, which actually in turn has been one of the drivers of consumption in the hinterlands as well. Now, while this remains a risk, management also thinks otherwise and opines that in the short to medium term, while definitely rural growth can run ahead of the urban growth, this is expectedly helped by the government's intervention so far that has been largely towards or targeted towards the rural economy. Now, COVID-19 spread is likely to be less concerning in the hinterland, which is positive for both demand and supply factors as well. While for sure there is a high uncertainty on the short to medium term consumption outlook, we do observe the factors like distribution reach as well as the strong positioning of Dabur in key categories that provides it a competitive edge. Now, in the case of rural areas, the firm has direct reach to 52,700 villages and plans to take it to 60,000 in FY21. Now, as far as the urban distribution is concerned, the management is also planning to drive sales through the new channels. Also, Dabur has started working with Reliance Jio platform in order to tap the retail as well as the Kirana stores quite directly on that platform. Now, Dabur is trading at a premium valuation of 50 times FY22 estimated earnings, and we do believe that the stock still provides an opportunity and is a quality defensive name, particularly when the overall corporate sector's earnings visibility is quite limited. Now, as Dabur is amongst the few consumption names which is able to gain or to defend the market share in different categories, right now, investors can really consider accumulating the stock on correction at this point in time.